Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, somebody gives us a little ray of hope after yesterday's drama. We ask the question again, what is war good for? Apparently, it's the euro. And Tesla hits another bump in the road. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So yesterday, well, from Monday onwards, yesterday was a lot of drama on the market because obviously yesterday was when the tariffs kicked in for both Canada and Mexico and increased tariffs on China. And then again, of course, we had both Canada striking back, China striking back with tariffs of their own. And yeah, it was all very, very stressful for the market. However, today, there's a teeny little bit of ray of hope. A little bit of ray of hope. And this is why I asked the question, is tariffs alive and kicking or are they dead in the water? Because there is a little bit of hope which was sneaked onto the market today. And that was the US Secretary of Commerce, Howard Lutnick, I think it's pronounced. Apologies, Howard. He says, if Canada and Mexico do more in terms of fentanyl, the drug which is coming in, which Trump's got to be in his bonnet about, but it's very easy to get the drugs across, then President Trump would meet them somewhere in the middle. What does it mean by somewhere in the middle? We don't know. But again, so the market sort of double-guessed a little teeny-weeny bit that maybe, again, this is just going to be like a negotiating tactic. And that, this full-blown trade war, which we're experiencing, is only going to be temporary. And this is the thing, Bank of America, they think the same sort of thing. This is what they had to say recently. They said, we believe that these developments are consistent with our view that tariffs are temporary and that threats of tariffs on Canada and Mexico will last until a new USMCA 2.0 deal is renegotiated. This is obviously the current trade deal between Canada, Mexico, and the United States. Now, Trump has a problem with the current USMCA trade deal because he doesn't like the way it's put together, even though he was the one who negotiated it back in 2018. I think he seemed to have forgotten that. So like I say, Bank of America sort of believes that, yeah, maybe potentially these tariffs are temporary. Again, it's just threats to get Canada and Mexico to the negotiating table to get the new USMCA 2.0 deal. Okay. But as it stands, that little bit of ray of hope, at the moment, the market has sort of opened a little teeny bit more optimism today, which we'll have a look at the moment. But anyway, I want to go on to the other story today. And of course, obviously yesterday, when we were all talking about the trade war, I jokingly put on the thumbnail, war, what is it good for? And I asked that question again, but apparently it's the euro. It's the euro it's good for, because the euro has actually surged to a 3-month high against the US dollar. Now, we'll look at it in a minute. The reason behind this is that the most likely new German chancellor, they've still got to put a coalition together, but the new German chancellor announced plans to raise billions of euros to boost defense. At the same time, the European Commission triggered a national escape clause from its Stability and Growth Pact, which could unlock 650 billion of national spending. All this is likely to go into defense, because obviously the general consensus in Europe at the moment, especially bear in mind, of course, that the US has stopped financial funding of Ukraine is that they need to put their money in their own defense and build up their defense. So this is the big talking point. And because of this, like I say, the euro is trading at a 3-month high. So let's have a quick look at the euro, actually, and pull that up so we can have a look at it. It's not just because of this. I want to talk about something else why I think the euro is doing pretty well. As you can see, look, we're trading now currently, okay, at 1.07488. We haven't seen that level or around that level till basically back in November the 24th. So yeah, this is being boosted by the defense spending promises made by Germany and the European Union, and the fact that, yeah, Europe do realize they're going to have to consider themselves practically on their own. So this is why they're boosting it. It's not just the reason, though, because we are seeing a bit of a weaker US dollar as well, don't forget. I mean, this is the cable. The cable is also trading quite at a high, again, from November. I mean, the euro has been the main thing, taking the market's attention. Okay, but the cable, the sterling, is trading at 128.71. We haven't seen that level again till since around November. And we look at the dollar Canadian. The dollar is down again as well against the loonie yesterday, and so yeah, you are seeing a bit of dollar weakness. But the headlines and everybody's getting excited is the euro, because don't forget, beginning of 2025, there was a lot of investors predicting the euro to go to parity once again. So this is why I think it's got a bit of excitement today, for the euro. Moving on to a different story. Tesla has hit another bump in a road again. In fact, I speak about Tesla quite a lot because they sort of take a lot of attention at the moment. Now, this next bump in the road is basically, it's been confirmed that Tesla sales fell by 76% in Germany back in February. And this is following Musk's comments about the German elections. Because don't forget, he was sort of trying to encourage German citizens to vote for the far right group. And this didn't go down very well because he shouldn't be getting involved in other countries' politics for obvious reasons. So this has obviously put a very sour taste to a lot of the Germans' population's mind, hence the drop in Tesla sales. Now, the argument could be, you can say, well, maybe they're not buying electric car vehicles in Germany as much. That's why the drop off. Well, that's not true. Because in fact, electric car registrations in Germany jumped 31% in February. So Tesla sales dropped by 76%, but the actual purchase of electric cars in Germany rose by 31% in February. Sorry. Now, I've said on some of the other videos when we've discussed about that, Musk is, the question is you're going to ask, is Musk really damaging his company? Okay, really damaging. And I'm not the only one who looking at Tesla thinking, it's going to be potentially in trouble, because Goldman Sachs has also lowered its 12-month price target for Tesla to $320 to $345. It doesn't sound that dramatic, but if you look at the start of the year, Tesla share price has fallen so far by 33%. 33%. Anyway, let's have a quick look at Tesla and see where they are today currently. And it's an interesting level as well I want to look at here. So let's have a quick look at it. So as you can see, it's currently trading below so-called the Goldman Sachs target. It's $271.57 or 70 cents. And what's really interesting, is it's practically now almost wiped out all of the gains it got on the back of Trump's election win. Because don't forget, when Trump won the election, there was a lot of excitement for Tesla. It skyrocketed, hitting an all-time high of around $485 per share. And then on the back that obviously him and Trump were best buds. They're going to, you scratch my back, I'll scratch yours, and we'll help each other out, and we'll do a load of boosts for Tesla. But since then, maybe, like I say, the markets looked at it and trying to establish the real intrinsic value of the company, with sales sort of dropping off, and new models sort of like not doing so well, like the Cybertruck, for example. So maybe, it's under pressure, and it's totally wiped out almost all the gains you had, like it got on the back of Trump in Furia. So yeah, anyway, let's have a quick look. Other than Tesla, let's have a quick look as well. S&P 500. Okay, so the day, it is still under pressure. It's a little not as dramatic as it has been over the last couple of days. It's still trading negative for the day, 5,766 points, 67.87. Very interesting with this, though. This is on a daily. It's coming close to this 200-day moving average, which I'm keeping a close eye on, because potentially it's a very interesting level. And as well as that, what I find really, really interesting is coming close to the level where it was when Trump won. After that, of course, we had the Trump rally, which pushed it to higher highs. Since then, we've seen the sell-off again down to tariff fears, things like this. I just can't help but wonder, A, the 200-day moving average is interesting, and keeping a close eye on that. But at the same time, it's getting close to the level it was when Trump won. And I do know, and we all know, that Trump is very proud of his performance with the stock market. So he might not be able to handle it. So I don't know. We'll have to see if he then changes tack. I just think it'd be quite interesting to see what happens when we do reach that level. If we do potentially reach that level, of course. NASDAQ is pretty the same. Again, very interesting with the 200-day moving average. Don't forget, this is on a daily. So keep a close eye on that. Volatility index, don't forget, this is the fear index, still trading around 2230. So it goes to say there's still a little bit fear there on the market. As for gold, it wouldn't be a video or a broadcast if I didn't talk about gold. Currently trading a little bit lower than yesterday, $2,919. So still has that bit of a shine as a safe haven there, and it's still hovering that sort of interesting potential uptrend or uptrend trend line there. Okie dokie. There's a couple other things I want to talk about, again, which could underline a little bit of concern, because there's obviously we're all obsessed with tariffs. We're talking about tariffs this, tariffs that, all about tariffs. There's something else, though, which is quite interesting, or not interesting, maybe a little bit worrying. Okay, now the ADP employment was announced earlier today, 75,000 in February. The expectation was 140,000. Now, January's reading was 186,000. So that's a big drop-off from January's reading, a very big drop-off. Okay, so it goes to show that people are getting nervous, or companies are getting nervous about hiring people in the current economic situation or current uncertainty in the market. Now, some investors believe this. They think ADP is an early indication of what the NFP could be. I don't often see it that way, because one's private and one's obviously governmental. So I don't see it like that. But some people do. So really, to be honest, with this number, which is quite shocking, there is going to be a lot of anticipation about the non-farm payroll happening this Friday. Expectation is for it to come in 158,000. Previous reading was 143. Because of this, I will be doing a watch along of the NFP starting at 1:15 p.m. GMT, 15 minutes before the announcement. Okay, so we can have a little chat about it, talk about potential scenarios, and have a look at them. Then we can hopefully watch the excitement unfold. Because again, I think we're so obsessed with tariffs, we're not keeping an eye on certain things like labor market, GDP slow down. Okay, and slowly, bit by bit, inflation creeping up. Okay, I think we're too obsessed with that. I think this could be another thing worth keeping an eye on. So anyway, come and join me on Friday. OneRoyal Live presents a watch along the NFP starting at 1:15 p.m. GMT. Other things still to come. This week, of course, we have ECB interest rate decision. That flew under my radar, to be honest with you. US initial claims, interesting because we had a very high number last week. ECB press conference, US unemployment rate, and as we've already discussed, US non-farm payroll. Don't forget, this is indeed a live show. So if you're watching me on YouTube, by all means, say hello if you like, or share with me your opinion, what you think about the market currently. Do you think we're clanging, this little bit of hope by, the Secretary of Commerce about the tariffs thing is maybe falsehood, or do you think Bank of America is right? They're only going to be temporary till, Trump gets what he wants from Mexico and Canada. Or, like I say, let me know what you think about the euro. Were you one of those who believed it could go to parity again this year and maybe still think it could go to parity? Even though, like I say, we're trading at 3-month high. Let me know your opinions, your thoughts, or leave me questions. If you're not watching me live and you're watching the recording on YouTube or Twitter or the blog, by all means, if you're on YouTube, leave a comment below, ask me a question. I will see the comment and I will obviously reply to you next time I go live on air. If you're watching me again on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live, which will be tomorrow. And if you like it, like this stuff, give me one of these. It's nice to know that you like what I do. Anyway, on that note, oh, I've got a comment. Okay, excellent. Hello, sir. I'm from Colombia. We have a team, I'm not too sure, of OneRoyal. Oh, okay. So I know there's an expo going over there. A team of employees of OneRoyal. Oh, excellent. Okay, really, I get it now. Excellent. Excellent. Well, hello there, sir. I hope you're well, my friend. I hope you're good. And they're doing well, and everything's good over there. Really nice to hear from you. What do you think about the markets? Do you have any opinion? Okay. No problem. But anyway, nice to meet you. Very nice to meet you. And thank you for saying hello. It's nice when somebody says hello and all that. Very nice to meet you. Okie dokie. If there is no comments, etc., what I will say, don't forget, these little videos, of course, are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.